We have an industry specialized system for invoicing. Not uncommon. Does anybody here on the live show have or know someone who has an industry specialized system for invoicing, something separate from whatever they're using for their general ledger? Whether it's an e-commerce platform or time tracking for professional services, or something in the medical industry to something HIPAA compliant to hold all the patient information, anything like that, whether or not it actually integrates with your general ledger system. This is common in a number of industries. Auto repair, you see a lot of that with information above and beyond what you need in the general ledger. So the question is, should it be, how perfect is this? Should it be integrated with our QuickBooks file? So I'm gonna give you my favorite accountant's answer. It depends. But here's a framework for figuring it out. How are you going to use the information? And what system is better at producing the information that you need to turn data into cash? That's right? There are really two purposes of having information: for internal purposes or for external purposes. What do I mean by internal? To make a decision, that's what we call a data-driven decision. To make a decision that's going to turn your information into cash somehow. Make more money, save money, stop spending money on something that's not working, identify an opportunity that you want to capitalize on, make a change in a procedure to bring in money faster, making a change in a procedure to stop any financial bleeding. Something that you're going to make a data-driven decision to turn data into cash. That's an internal reason to have information. An external reason to have information is to keep the feds off your back. So for compliance purposes, whether it's income tax or Nassim had mentioned a workers' comp audit, keep your overtime information for a workers' comp audit. And so you need information for you to turn money into cash and for external compliance purposes. So with that in mind, knowing, is everybody on this live show going to promise me that you're not going to look at reports just to go, oh look, I looked at a report and stick it in a drawer? You're with me on turning data into cash? So you're going to think of the specialty system versus what I have the ability to produce in QuickBooks, which gives me the information I need either for my outside parties or for my aha moments, moments of clarity, which gives me that information, and which gives me that information accurately and fast with no drama, fewest number of clicks, etc. The answer to that question is the answer to should it be integrated. I know plenty of companies who should not have those specialty systems integrated into QuickBooks or whatever general ledger system they're using, because all they need in QuickBooks is the deposits and maybe a monthly cash to accrual journal entry adjustment. They don't need to duplicate in their QuickBooks file what they have in the specialty system. They can run all the reports that they need from the specialty system. Why duplicate? And there are other companies for whom integration is absolutely essential. They can't have two separate customer lists. Or the specialty system, yes, that has specialty information, but we need certain financial information to come from that specialty system to the general ledger. Maybe it's new customers. And maybe we need certain information to go from the general ledger into the specialty system. Maybe the specialty system is a CRM platform. And when somebody on the sales team is calling up a client to discuss an upsell or a cross-sell, maybe on that customer card, they need some information from QuickBooks, like is sales inception to date, or sales quarter to date, or profitability. So it could be quite essential to have those systems integrated. So the two key questions that you want to ask yourself are, how am I going to use the information, and which system is structured to give it to me best? Why would you possibly recreate invoices if you could integrate them and boom, have them in there? Now the cool thing about this is, in some companies, maybe it doesn't need to be integrated. Maybe you just need to record the deposits in QuickBooks and then once a month do a cash to accrual adjustment. So it's best to have that integrated with QuickBooks, and in 1, 2, 3 clicks, you can get yourself an AR aging summary. What do you do with that? You look for numbers that are old, large, or negative. to make sure that your information system is accurate, to make sure that nothing is getting too old. Because, and this is just an example of how you can turn data into cash, is when you have the older the receivable, I'm going like this because there's a chart. There's a chart in my head, which now you can see goes like this, with a steep drop, because the older a receivable gets, the lower the probability that we'll ever get paid. And if that's not sad, I don't know what is. You pour your time, your energy, and your lifetime of expertise into delivering services for someone who then doesn't pay you. Now, if you knew going in that these services were pro bono, fine, because that's how you designed it. So if you designed this relationship to be pro bono, fine. But if you designed it that it was an equal trade of services for money, don't let the receivables age, because probability decreases that it will ever turn into money. And money is what helps you be a contribution to the world and make that workable. So that's a great example of turning data into cash.